Good morning, and I'm Malcolm Graham Wood, and welcome to my Core London CEO interview. My guest today is Ed Bowen, who is the CEO of EDR, which is an unquoted, but carries a lot of weight in the oil and gas sector, which I'm hoping to hear a lot about from Ed today. Welcome back, Ed. We worked out over 2 years since we last saw you. It's great to see you again.
Thank you very much, Malky.
So let's not hang about. Let's tell everyone, or remind those who don't know what EDR is. Give us a rundown on the company.
So, Malcolm, we're a geophysical consultancy, and we help clients in the energy sector, whether it be exploration, production, or in the renewable space. And we help them to de-risk their asset portfolios, principally by putting quality control supervisory services onto their projects. And we do that pretty much globally. Excellent.
I mean, you're a young business. I think you only started 4 years ago or something like that. But your growth has been exceptional. Talk us through how you've grown so quickly.
We've done very well, and that's largely to do with the team that we've put in place. We've had tremendous amount of support from the blue chip oil and gas majors, principally because we entered the market at a time where they wanted some change. They wanted some innovation, and they wanted the status quo to be challenged. And as a consequence, we've grown very rapidly. We've had a positive EBITDA for all three of our first 3 years, and the future is looking very promising indeed.
Excellent. I'd like to drill down on two of those in particular. I know you've got a fantastic blue chip client base. So I'd love to know a bit more about that. And, why, I mean, obviously they appeal because they're big clients in the sector. And how you make so many inroads into these important clients. So the competitive landscape that you're in and who you're up against. So first of all, maybe talk us through the client base.
Certainly. So we're working principally for the super majors. So our clients would be ExxonMobil, Shell, Total, Repsol, BP, and then a suite of AIM listed businesses. And we're able to deploy resources in multiple countries. So in the last 3 years, we've worked in over 34 countries on about 76, 78 projects. And that's principally looking after their seismic, drilling or shallow site survey work, be it onshore or offshore.
Just before we go on to the competitive landscape, how much has that changed? How different has that been in the last year? It's almost exactly 2 years since the pandemic started. And apart from the fact that the oil companies cut back on their capex and so on, the less business to go around, but you seem to be obviously doing very well. How's the nature of the business changed since before the pandemic?
So we've seen a lot less exploration work. So the blue water exploration has almost but vanished. In fact, it's starting to come back now. A lot of it has been about enhancing reserves, maximising production from your existing resources. So we've done a lot of 4D work, a lot of site survey drilling type work, where it's all about understanding the reservoir, how it's changing, how can we continue to produce from it. And on the onshore side, again, because your costs are slightly lower, that has albeit continued. And we've had to deal with the challenges of COVID, of moving people around, of isolating, of crossing borders, and each contractor has a different policy. So we've got to be fairly nimble, but being able to react quickly is how we've been able to continue to work.
And are you doing business that their own internal departments would have been doing before, but they've got rid of them all, or is it in addition?
No, it's fair to say that the majors have got rid of a huge amount of staff. They've had to bring their costs down, and using consultancies is a very inexpensive way of tapping in and continuing to have technical resources.
So competitive landscape. Who are you up against? Or is there a lot of them, or is it a
So, well, that's an interesting question. In the manpower space, we're finding a lot of consolidation, and that's only natural as operators want fewer suppliers. In the consultancy arena, it's still surprisingly a very fragmented market. And I think that's probably because you've got one major player, you've got number two a long way further south, but with their own problems and with debt and so on. And then you've got a large number of smaller players who have either got a particular client or particular technology or particular geography where they're strong in. Interestingly, we're starting to see some of those disappear, particularly as a lot of the business have failed to innovate, have failed to change the model. So there's a lot of people retiring, a lot of people are just giving up, realise that actually they've sustained losses over the last couple of years and now's the time to finish. So for us, that represents opportunity, either on an organic way or through M&A.
So I'd like to get an idea of how EDR is structured. I mean, who the key principals are, and you mentioned some people have got a lot of people working for them and so on, but quite a lot of your people must be self-employed people, mustn't they? So how do you structure EDR?
So we have a small board and an operations team, so number 7 in total, and then the majority of our workforce are effectively freelancers. But they're engaged on long-term contracts, so we retain a sort of sticky relationship, but we're able to keep the core G&A low. We don't have big glass-fronted offices, which ultimately clients no longer want to pay for. So the G&A is low. We have a small, nimble board, and then our associates are based all over the world, principally in Northwest Europe, and that's how we're able to react quite quickly.
And by the very nature of the fact that we're using these people as self-employed, is that what you might call challenging the status quo in the industry? Yes,
I think carrying big G&A now is not what people want to do. And if I look at the EP&D in-source division which we have, we're putting whole technical teams in for operators who actually don't want to have the staff on their books. And as soon as we've either drilled that well or delivered that exploration project, they can then descale the team entirely. It's a very cost-effective way of having technical resource when you need it.
Yeah. And do you work with partner organisations on that front, or in different ways in the business?
We do. We have agents, of course, in the Middle East and in Africa, as you have to. But also we have a couple of partnerships. One which I'm most proud of is a company called PCM, a chap called Ben Remfrey, who has built what is arguably the finest ERW training facility outside of the military. And particularly as we are doing a lot of onshore work, having that sort of risk management and explosive expertise on hand, it has been really game-changing for us to give operators the comfort that we know exactly what we're doing, but not hiding from the fact that actually this is done in partnership, as opposed to what most people do, which is just to white label it. No, we're just upfront about it.
Yeah, well, I mean, makes sense, doesn't it? Before we move on to a couple of other things, I can't have you here with it, and having talked about the industry and so on for so long, without saying where you think the industry is now. It's gone through a lot of change. CapEx, which I've always been saying has been overdone and therefore leading to ultimately a higher oil price. Tell me, what do you feel how the industry looks at the moment, and maybe a thought about as transition comes through, maybe into more gas or whatever it happens to be. Any thoughts?
I think we're going to see higher commodity prices in the short to medium term. That's unavoidable. And it's largely linked to the geopolitical scene that we've got today. We've got dwindling reserves. We're not replacing those reserves fast enough. And there is a lot of worry in the market about energy security. And certainly if you take the UK, where a mere 40% of our gas comes from the North Sea, it's at the lowest level it's ever been. That's very, very worrying. And unless you're going to put a long-term strategy in place, which is then going to fund the energy transition, I can't see commodity prices coming down anytime soon.
Mm. So, when we last spoke, EDR was a private company, and still is. It hasn't achieved a quote yet so far, but you've got it in. You must have it in mind. How are you funded, and what's the thoughts about being a public company at some stage?
So we've not got any immediate thoughts on going public. We're still totally privately funded, and actually the company's in a great financial position. We took no furlough during the two pandemics. We've got no leverage in the business. We've got a core team of people. So the business is on a great firm footing. For us, it's now about growing sustainably and responsibly, and I think it'd be very easy in this market to have an exponential growth, but then not be able to keep going. So we're just going to keep doing what we do and ultimately be driven by the needs of what our customers are telling us.
So that's interesting, because I mean, you've got the blue chip list of clients, and they do good business with you. And you don't want to run before you can walk, in a sense. But I presume you think you can see more business from existing client base, or do you think you could grow the client base even more?
I think it's a combination of both. We could do more with them, particularly if we continue to diversify the range of services that we offer. And that's something we're working on, in bringing more technical experts in-house to then offer the service. But also we need to do more with particularly the AIM-listed businesses. And when I started the company, I always felt they would support us perhaps more than the super majors. In fact, I got it totally wrong. Yeah. But fortunately I did, because they've been very focused on controlling their G&A. They've done very little work. Now they're getting back to work. That's the time to remind them that we're here. And actually we've now got our own, very impressive track record. Come and talk to us, and we'll look after you.
And 2 years ago, you may not have thought quite so much of all these companies needing to be low carbon and nil carbon and everything else. How's the drive and the move to ESG and nil carbon output and oil fields with being run by electricity and everything? How's the whole of the low carbon process affected you?
We are transitioning with clients to tackle those sorts of issues. Ultimately, it's got to be funded by their profits from oil and gas. So it's going to be a gradual process. And whilst everybody thinks that oil and gas is a dirty word, at the end of the day, that's what's going to pay for the energy transition. So we need to work with them on new and better ways of doing things. And it's that innovation that certainly some of the things that we're doing with them enables them to make good headroads into that.
And a lot of your clients would say about you that you've got a unique selling proposition that you've really delivered on, and you differentiate from other people. You've mentioned that to a certain extent. How would you sum up the fact that you are sort of unique in the eyes of a potential, big clients like the majors that you mentioned?
For me, it's quite simple. We listen. We innovate, we then act upon that, and ultimately we deliver. And it's that track record of consistently delivering that's the reason they come back to us. So we're here to stay. We're just going to keep doing what we do, and that is generating its own interest and its own success.
Brilliant. We're running out of time, I'm afraid, as often the case. And as you know, I always ask pretty much the same question as we get to the end. Where would you like to see EDR in 12 to 18 months' time?
I'd like to see us have a larger slice of the AIM-listed pie. I think we're ready for it, and as they get back to work, so are they. We've got some exciting plans into some new technology, which will assist bring down the cost of exploration. So we're just going to continue to do what we do and do it well.
Well, I wish you luck. Thank you very much for being a guest on Call London again. Ladies and gentlemen, thank you very much indeed. I've been Malcolm Graham Wood, and I've been doing my CEO interview. Today my guest has been Ed Bowen, the CEO of EDR, and it's been great to see him again. And I look forward to seeing you again soon. Bye now.